now. But let's talk about consumer credit. That continues to be in focus. How's the second wave of the COVID impacting the consumer credit, and what are the housing and personal loan disbursements, recovery post the first wave, and now what are the observations with the second wave currently underway? KM Nanaiah, who is the MD and CEO at Equifax India, joins us on the show right now. Mr. Nanaiah, good morning. Great to have you on the show. Help us understand what are the trends that you are observing right now when it comes to consumer credit delinquencies across segments like personal loans, two-wheeler, vehicle finance, consumer durables, and how are things different from the first wave of the pandemic?
Good morning, and thank you for having me on the show. So if you just look at consumer credit, right, pre-COVID, the industry is to source about 7.5 lakh to 8 lakh crore loans every quarter, every month, and which in the COVID period went down to about 3 lakh in that quarter. That is April, May, June of 2020. But as you see today, it's recovered back to its pre-COVID levels of quarterly sourcing of about 7 to 8 lakh crores. So. Given that, what you need to see is if you look at the overall the delinquency level or the 90 plus DPD levels are trending at about 25 basis points higher than the pre-COVID level. But that's on the overall retail segment. But I think what's important to see on the retail is to look at how each of the product lines are performing. Right, you refer to the personal loans and the consumer loans and the two-wheelers. So if you slice this a little bit more from the consumer loan industry perspective, I think what is holding good at this point in time is the housing loan and the property loan. I think they're really holding good, both in terms of the recovery growth and also in terms of the performance. They're really holding very good. So almost the 90 plus DPDs are almost at the same level as the pre-COVID level. But what has changed from a performance standpoint is largely on the consumer loan. Consumer loan, 90 plus DPD is up close to about, trending in the range of about 400 basis points on the consumer loan side. And the two-wheeler is, also it's about 200 basis points higher than the pre-COVID levels. Personal loan, I think it's a bit of a combination. It's showing good growth signs as compared to the pre-COVID levels. And also holding fairly okay in terms of the performance. They're about 90 basis points higher than the pre-COVID level from a personal loan standpoint. What we see on the personal loan is largely the smaller ticket personal loans are picking up momentum, largely fueled by the fintechs in the country. The smaller tickets are picking up momentum both on personal loans and consumer loans. But I think consumer loans where we see a significantly high 90 plus DPDs, as I said earlier, it's about 400 basis points higher as compared to the pre-COVID level. If you look at pre to post-COVID, I think the entire consumer lending bounced back very well. Largely fueled by PSUs and the private banks in the country, and also the initiative by the central bank, the Reserve Bank of India. Extending the emergency credit line guarantee scheme, which is kind of, extended the credit to the most needy, right? The MSME segment, it led to the credit growth in that segment. So overall, I think, markets recovered back from a credit standpoint, but each of the product lines, each of the lines are performing very differently. I think stress is obviously seen on the consumer and the two-wheeler. I think housing is really doing very well.
Sure. What about the disbursement trends across the country, though?
So, as I said, the disbursement trends, fairly back to the pre-COVID levels as we speak today. We just got to, wait and watch as to how the trends will be in the month of April. We are seeing, lower trends in the month of April from a disbursement and sourcing standpoint because of the lockdown and, partial lockdowns in some parts of the country working, some part of the country not working. So the disbursements in the month of April is showing some pressures on it. But, till March, the recovery was really, really, really good.
Give us a sense as to, what these reports mean, because they suggest that the MFI sector or the bottom of the pyramid is more impacted and is more vulnerable. So what are the delinquency trends that you're observing across key states, and which have been the most impacted and the most resilient?
So, microfinance, again, showed a very good V-shaped recovery post the COVID. The quarter of October, November, December, and January, February, March, we're technically back to the normal sourcing. If you look at the overall portfolio of microfinance as compared to pre-COVID to post-COVID, they have grown by about 12%. So the microfinance portfolio has grown even during the most difficult times. Having said that, the 90 plus DPD, has actually increased on the microfinance close to about 450 basis points. So there is stress seen there on the collection side of it. But the good thing about microfinance is a very resilient industry, right? We've seen many such instances of, either a flood or, something of this nature, a calamity, but they bounce back fairly well. During the COVID time, we did a bit of analysis to see as to what's the likely impact of such, lockdown or a calamity on the credit ecosystem. And what we normally saw was that it takes about, 3 to 4 months after you exit that event, the DPDs actually peak up, and which is exactly what we're seeing today. Is that, so come March, the DPDs are increasing, as I said, about 450 basis points. This is from an all India performance standpoint. But if you look at states where I think the stress levels are, higher, stress levels are lower, obviously I think stress levels are lower in states like Karnataka and states like Rajasthan. It's a bit higher in states like Maharashtra, West Bengal, and Assam. These states are, higher by about, 700 basis points in Assam, and very similar as Maharashtra, which is another 700 basis point, and West Bengal is close to about 900 basis points in terms of the stress seen on the microfinance side of it. But, a couple of things on the microfinance side, right? The point number one is during the last the lockdown period, I'm sure all of them have adjusted to the new way of working, more digitization of processes, and also, in a broader sense, the adaptation to the new normal, right? So these challenges have been seen in the COVID times, and we're seeing it again now. But comparatively, right, that was a complete lockdown. Now it is a partial lockdown. With the changes in the processes, more digitization, with the partial lockdown, the impact that we possibly see after the second wave could be lesser than the first wave. But I think the point to note here is, the impact of the first wave is still on, right? As I said, the 90 plus DPD is up by 450 basis points. So the second wave impact is likely to be on top of the first wave impact in some sense. So I think that's where I think we need to wait and watch as to how the industry will perform as we exit the second wave. I think it's the faster we exit the second wave, I think is better for the industry. But broadly, the way we read it as the impact is not going to be
right. And I just wanted to come in here and understand from you that there have been a lot of relief measures sought by the Reserve Bank, by the government, by the MFI sector, from the MFI sector. So what more can be done according to you, and how have you looked at the steps that have been taken? A quick word.
I think the steps taken are very positive, right? So improvement in the liquidity required for MFIs are very, very critical. If you step back on MFI, right? So the normal lending in microfinance happens to support the livelihoods, right? So it is like, for financing a cash flow requirement on a very small scale. So I think the continuous cycle of, financing is very, very important in the microfinance side. And the initiatives by RBI last week in terms of special rep rates for SFB to, fund microfinance, and SFBs to also to, extend loan up to $1 million to the individuals. I think these are very positive things in terms of improving the liquidity in the system to help the microfinance institution to bounce back and to continue to, fund the needs of the borrower.
Okay, and give us a sense as to what the outlook is as well when it comes to the situation improving. Do you believe it could normalize over the next 1 to 2 quarters? And more importantly, rather than second guessing that, which segments do you believe are likely to bounce back first or quicker?
So, if you look at the consumer, I think housing, holding good, and I think it continues to show a very good performance. I think the personal loans will also bounce back quicker, and so is the auto and the two-wheelers, right? Two-wheelers, I think there is a lot of caution while it is still considered as unsecured loan largely by the lending institutions. But I think there will be that pent-up demand, right, for the two-wheelers and auto, which is likely to pick up. And I think the business loans, by a lot of stimulus measures, even the one that was announced last week in terms of restructuring of the MSME loans, I think that will continue to grow because MSMEs are the most credit needy segment in the country, and it's extremely important that MSMEs get the credit. And there's a lot of initiatives on that front to enable access to credit by the government as well. So these are the areas that I see on the consumer side of it. And the microfinance, I think it is across the top 10 states, which contribute about 85% of the microfinance portfolio in the country. Depending on how quickly we exit and how the vaccination trends, I think the recovery would be aligned to that. But if you look at this, largely the microfinance is a significant portion of the portfolios in the rural segment. And the impact of the rural segment could be in patches at this point in time. So we'll have to really wait and watch because in the earlier wave, the impact was largely on the urban and semi-urban. I think now it's across all. So we'll have to really wait and watch as to how the recovery trends.
Thanks very much for taking time out, just giving us a clearer picture as to how things are shaping up on that front and what the outlook is for the delinquency levels across sector, the MFI sector, and how vulnerable it is and has been through this pandemic.